Welcome to this video. Today we talk about confirmation of documentary credits. Documentary credits are being confirmed to give additional comfort to the beneficiary. Confirmation of a documentary credit is an additional promise by another bank in addition to or different from or separate from the issuing bank. Now we will explore in this session why it is advisable to have confirmation and how it adds an extra layer of security by involving another bank. Mostly this confirming bank will be a bank friendly to the beneficiary, maybe beneficiary's bank or a bank in their own country. We will also highlight the benefits of confirmation and other aspects related to confirmation. An unconfirmed LC is one where only one bank is there who is liable or responsible to pay, and that is the issuing bank. In an unconfirmed DC, the issuing bank guarantees payment to the exporter upon presentation of confirmed documents. The issuing bank is solely responsible. The exporter relies entirely on the issuing bank. There is no additional guarantee by any other institution. The risk is that if the issuing bank becomes insolvent or if the issuing bank default, the exporter may not receive the payment. Political or economic instability in the issuing bank's country can also render the exporter exposed to the risk of non-payment. For example, if an exporter from Brazil is shipping goods to the buyer in Nigeria, under the unconfirmed DC, the Nigerian bank is what you rely upon. If something happens to the Nigerian bank or the Nigerian economy or the Nigerian currency, then the Brazilian exporter may face some additional risk in the form of delay or denial of the payment. Looking at confirmed DC, what is it? The confirmation involves a second bank known as the confirming bank. This provides an additional independent payment undertaking to the exporter. The confirming bank guarantees the payment even if the issuing bank fails to honor its commitment to pay for a compliant presentation. So when an LC is issued, the issuing bank gives a promise that they will pay against a compliant presentation. That means the documents called for should be submitted, evidencing compliance with the terms and conditions therein. Now, when a bank adds its confirmation, that bank is giving an additional separate independent promise that they will honor a presentation provided the terms and conditions of the LC are met and the desired documents are presented. So the confirming bank assumes the liability for payment, adding an extra layer of security. Typically, confirming bank is the exporter's bank or a bank in a more stable jurisdiction compared to the issuing bank. So this will reduce the risk related to political or economic instability. Confirmation is requested by the exporter mostly when the issuing bank or the issuing bank's country is perceived to be more susceptible to risk or less reliable. There is a confirmation fee for adding confirmation, and this is normally paid based on the risk perceived on the issuing bank or the country, and it is normally taken up by the exporter. The beneficiary will have to pay the fees. Now, what benefit does it give? This confirmation gives an assurance to the exporter that they will be paid on time against a compliant document, irrespective of what happens in the issuing bank's country or economy or the status of the issuing bank. This reduces the exposure of country risk and bank risk on the issuing entity by the exporter. For example, a German exporter requests confirmation from an European bank for an LC issued by a bank in, say, a politically unstable region. The confirming bank ensures payment even if the issuing bank defaults. When to use confirmation? Confirmation should be definitely used when you find the importer's country or the region is politically unstable. If you find that the importer's country is in an economically volatile area, then you should, as an beneficiary of the LC, ask for confirmation. Banks operating in a politically unstable or economically volatile region may have challenges in making payment under the LC. Maybe because of certain blockages, certain sanctions, maybe currency controls, maybe administrative issues, maybe licensing, maybe financial crime. All this could happen. We don't know. So, because of the unknowns, it is better as an exporter to ask for confirmation if the importer or the importer's bank is associated with these regions. The solution is to get a confirmation from a stable region or more reliable region. For example, an Indian exporter shipping pharmaceuticals to a buyer facing civil unrest, then we don't know whether the bank will be able to pay on due date. So, we will have to ask for a confirmation from, for example, US based bank. Issuing bank with questionable creditworthiness, if it is involved, then definitely you have to go for a confirmation. What is that? If the issuing bank's credit rating is declining during the recent period, or if it is not improving or stable during the recent past, or historically there have been evidences of delays by the party, the bank, then the exporter should be aware of the potential significant additional risks. So, confirmation from a financially sound bank is recommended. For example, there is a Turkish exporter and they are receiving a LC from a small regional bank in Africa. Then the Turkish exporter will definitely find it better to have the LC confirmed by a bank outside Africa. Now, exporter may need extra assurance sometimes. What is that? That is, even if the issuing bank is reliable, exporter may prefer a confirmation for added peace of mind. Why? Because when confirmation is added by the beneficiary's bank, the risk of payment transfers to the beneficiary's bank. It is technically a local risk where they can get the payment easily. They need not wait for getting it transferred from a faraway place. So, Japanese exporter, if they are shipping high value machinery to somebody in South America, so the South American bank or the country may be good, but still the Japanese bank will be asked to confirm by the Japanese exporter, so that it is easy for the Japanese exporter to look for only the local bank to get the payment. Once the documents are presented, once a confirming bank finds it compliant, then there is no going back, come what may, in any other part of the world. This matters especially because some countries may impose currency control or restriction to remit or other regulation at a later date, which may prevent funds to flow from the issuing bank to the beneficiary. That is why the exporter or the beneficiary would prefer to have the risk transferred to a bank close to them where they can monitor better. A confirming bank should be in a stable jurisdiction, not necessarily in the beneficiary's country. Now, for example, if there is a Chinese exporter and they are shipping electronics to a buyer, for example, which has a strict foreign exchange regulation, then you should be worried whether you will get the currency expected on the due date or not. So, confirmation is a better alternative to mitigate this risk. What is the process for confirmation? The process is that the exporter will request the confirming bank to add their confirmation. For this, the LC should say in the confirmation field, may add or confirm. If the LC says without, then the confirming bank will have to add what we call as a silent confirmation. That means issuing bank has neither authorized nor is aware. That means the confirming bank may have certain lesser rights against the issuing bank. So, the price might be higher. When the exporter requests for a confirmation from the advising bank, if the LC says may add or confirm, the confirming bank will add their confirmation. So, this is the perceived reliability of the issuing bank and the country if it is likable to the confirming bank, only then. The confirming bank, after evaluation, once they add their confirmation, the risk of payment lies with the confirming bank, irrespective of issuing bank pays or not. It is not that if the issuing bank doesn't pay, we will pay. It is an independent undertaking by the confirming bank that a compliant document will be honored as per LC terms. The confirming bank will also notify the exporter whether there are any other compliance requirements that they expect from the exporter. How the confirmation is executed, the exporter will ship the goods and submit the documents to the confirming bank. The confirming bank will review the documents and find that the documents are compliant. And once they find the documents are compliant, they will honor. So what risk is now transferred by the beneficiary from another place to the confirming bank? The sanctions risk, the currency control risk, the insolvency risk. Because the local confirming bank will have to pay in the LC currency or an available currency to the exporter because they have undertaken to honor. So that is how the payment is executed in favor of the exporter by the confirming bank. What are the costs and other considerations? Now there are ways in which this cost will be divided. Sometimes the applicant may pick up the cost, but most of the time the confirming bank cost is paid by the exporter to the confirming bank directly. So that is how the cost of confirmation is being shared or accounted for. Now this confirmation will add to the overall cost of transaction because confirming bank fees is a percentage of the value of the LC. This will have an impact on the cash flow of the customers. The exporters may need to factor in the confirmation fee when they negotiate the price and agree with the counterparty. Now the reliability of the confirming bank also matters because it is crucial that the confirming bank is a reputable entity, or else the very purpose of confirmation may not work. Why? Because the exporter believes that the confirming bank or their country or that economy may have certain instability in future. You are asking for confirmation. If the confirming bank is also from a place where it is not so reliable about a future political or an economic situation, then the risk of non-payment remains as is. So reliability is important. Next is the alignment. Now the confirming bank may have their own expectations or understandings or the procedures and policies, and that may not necessarily align with the terms of the letter of credit. That may also bring into some problems. So it is necessary for the beneficiary and the confirming bank to be aligned as to what are the expectations and what is the contractual obligation. Let us look at a case study. Now, when an exporter is a French entity and they are supplying luxury goods, and the buyer is in a politically unstable country, and the issuing bank is a local bank of that with limited international presence or credibility, then you have a situation where exporter, though transfers the risk of the applicant's non-payment to the bank, is still not happy because bank's ability to pay or the country's ability to support with the currency and economic situation is not very clear. So there is a risk to be mitigated. So what happens? Exporter requests or asks their advising bank, the European bank, to confirm the LC issued by a local bank in another country. Right? And then the European bank assesses the risk and agrees to confirm the LC, guaranteeing payment to the exporter. The exporter ships the goods, submit the documents to the confirming bank. The confirming bank will verify, find it compliant, and they will agree to honor. The exporter receives timely payment despite the political stability in the buyer's home country, which may have stable or unstable situation on the date on which payment is due. But on that date, you may not be able to go and get a risk cover. That is why you have it confirmed in advance. What happens if you try to confirm after getting a notification that the country is not in good shape? At the time when you go to a confirming bank will assess the risk of the country and the bank, that is issuing bank, and find it not so attractive and price it accordingly. So it would not be wise. So the benefits of confirmation is risk mitigation, because the exposure is not to issuing bank or a issuing country's insolvency, but transferred to the beneficiary's preferable bank in a stable location or jurisdiction. Payment is certain because the payment is going to come from a sound institution different from issuing bank. It will also facilitate financing. Why? Because the confirmed LC is able to bring better access to export finance because payment is anyway guaranteed by additional bank. And then this enhances the trust because it gives confidence to work in high value new trade relationships. What are the limitations? The limitations of confirmation is that there is an additional cost or fees to be borne. The expenses will affect the margins. Second is dependency on confirming bank. Exporter is relying on the second bank. But that does not mean documents cannot be presented direct to issuing bank. Any presentation can be made direct to issuing bank. But then the risk of issuing bank country remains. There's a complexity in the process because for getting confirmation you need to in advance inform them. They will analyze and let you know. Then you have to pay the fees and then they will give you a notification that they have confirmed or added their confirmation. And then this bank will take up the responsibility of checking the documents. They may come out with the discrepancies and delay the payment. All those complexities are there. Then depending upon the risk, it is not always necessary. In stable market, if the issuing bank is having a strong balance sheet, confirmation will not provide any additional benefit. What are the key takeaways? Confirmation adds security. We have to balance the additional fees payable versus the security confirmation gives you. We have to see whether dealing with questionable banks in a volatile region is worth the risk or saving the cost of non-confirmation. We as an exporter also have to see whether the confirming bank that we have chosen is good enough and reputable enough to be a partner in the transaction. Thanks for watching this video. We shall catch up again in the next session.